Hey everybody, it's Robert Garcia here, an agent with the Eric Stewart Group of Long and Foster, and I hope you all are doing great. Well, it's a lot of things that are happening in the real estate market, but let me give you a little bit of perspective what I'm seeing right now here in my local area. So as of probably early June, definitely the inventory has become more stable. There's actually more homes on the market for sale, which is really great news for a lot of the buyers out there that have been struggling to actually grab a piece of real estate in the last 12 months. A little bit of the downside of that is that interest rates are now in the sixes, right? They used to be in the low fives, mid fives, now in the low sixes, mid sixes. I heard some people said that some banks actually saying 7%. And remember, the whole world of interest rates have different variations. It's never a straightforward product that it says this is what I get and this is how much it is and this is what it will happen. It's never like that. It has to do with so many variables: your debt to income ratio, your credit score, how much money you put in down, is there going to be a mortgage insurance? I mean, you name it. It's all those kind of things. But the news, of course, like always, their job is to continue to give you a little bit of potential headaches, right? That's what the news are trying to do, and to scare you, right? That's basically what their job is. They just want to scare you. So I want to show you here real quick a couple of things that I am seeing as like a little bit of what's happening. So if you take a look here, this chart right here, it says, hey, a lot of realtors are just saying things that are happening. Don't buy, huge scam. A lot of problems are happening. And he's a really well-known guy here in the area that I respect a lot. And they definitely have a lot of these things that it's happening in the market. So this is in part why the people are reacting to the many things, right? Inflation, the cost of the gasoline, the cost of food, um, the supply chain issue is also something that is affecting a lot of these things. And of course, then you start having big companies that are starting to make cuts, because what happens is once you're not able to sell more homes or refinance more homes, the big companies have to make big cuts. So that's what's something that is happening right here. So let me share with you guys here a couple of the things that are happening that I'm seeing. This is from Fox News. This is something that says, Redfin, it's now letting lay off people because they're not able to sell homes at the same speed, which it is true. Demands for home, fell nearly 20% based on the projections they have from the month of May. It's they're just trying to say that the inflation is going everywhere, and it going, changes on the stock market and so on. So there's definitely that sentiment right now that things are changing and things are not necessarily happening as the same speed they used to happen. So I'm going to get a little bit more local right now. I kind of like share a little bit of what's happening. I'll get back to you guys on what's coming ahead, but let's take a look right now real quick here in terms of what it's coming up and what you can potentially see. So a lot of people are asking me, hey, are we seeing is this the crash, the bubble has burst? What's going on, man? I will probably call it more of a reset. And let's just read the definition of a reset. A reset, it basically says to set again or anew, to basically to start from zero. That's exactly what we're seeing right now in terms of the market. There's a lot of people that the market needed a harsh reset. And that's what is happening in today's environment. We needed to reset this market because prices cannot continue to go up, as well as the demand and the cost of borrowing money. Those two things can never go up. As a matter of fact, they actually have to trade. Prices go up, interest rates have to be on the lower end. If prices go down, that means interest rates went up. And let's just be very optimistic. I mean, interest rates have been, for the most part, very, very good, I will say, in the last couple of years. So it hasn't been that it was like a bad thing, like, having an interest rate was in the 4s and 5s, it's the worst thing. No, it's not. I think having interest rates where they are right now are much better. And we're gonna look at right now what's going on with the interest rates right now here. So I'm gonna pull it here from my mortgage news daily right here to look at where things are. So it looks like they have kind of like come down quite a bit, probably in the last couple of hours. I mean, this is moves very fast. So looks like interest rates are now, for 30-year fixed, this is the average right now. It's about 5.75 for a 30-year fix. Of course, a lot of these things, they all include buying points of one way or another. So that's something that you have to keep in mind, that there might be some points that you need to be buying. Speaking of points, I have some good tips to share with you guys, but let's just look at this article. And it's a very interesting article that I really got. And this is the one that kind of got me thinking, says, this is from Forbes. Fortune.com. The Fed plans to reset the housing market, raising the likelihood of falling homes prices. So let's read it a little bit here. It says, it is not just about how expensive housing became, it is how fast it got there. Okay, that's true. Appreciation always has been between 5 and 6%, 7% per year, and probably prior to COVID. It only took 24 months for U.S. home prices to soar a staggering 37%. For comparison, the biggest 2-year spike leading into the 2008 housing crash was 29%. So even this time, the increment, it's much bigger than back in 2008. Heading into this spring, the Federal Reserve decided it had seen enough. The central bank quickly raised interest rates, which saw the average 30-year fixed mortgage rate climb to 6%, up from 3.2%. That's just to give you perspective. So if you're borrowing $500,000 or the loan is $500,000 and you put in 10% down, so that means you're borrowing it's $450. Let me rephrase it. The purchase price $500 and you put in 10% down, so you're only borrowing $450. That's difference between 3.2% to 6%. You're looking at $344 difference per month. Ouch! Your salaries haven't gone up that much. So this is what Jerome Powell says. Buyers need a little bit of a reset. And that's why I'm calling it a reset, not a bubble bursting, not like the fall down of the market or the meltdown. In the housing industry, the total number of active listings is referred to as inventory. Since 2014, annual inventory levels have been declining. That was driven partly by shifting household preferences. Okay, people choose to stay longer in homes. Lower levels of home building following the 2008 housing crash and the onset of millennial first-time home buying. Remember, millennial was a dormant population or a segment of our population that was not actually jumping into buying a home. In the last 2 years, probably most of my clients that have purchased homes have been millennials. Okay, so we need to cool down this thing, right? And the Federal Reserve said, okay, guys, we need to jump in, not only inflation, but the housing market, we need to cool it down. It is clear that Powell hopes the housing cool down caused by rising mortgage rates will help to push inventory levels up. Powell suggests it helps buyers, the thinking being when shoppers restart their house hunt, they'll be met with a friendlier market. Higher inventory levels will give buyers more time to decide and reduce the chance they'll have to engage in a bidding war, which is what has been happening in the last couple of months. So you see here's where inventory prices, you see this blue is where things have been kind of like going up and down. So our inventory, it's up 19% here in the Washington, D.C. metro area. Falling home prices, Powell seems to have suggested the impossible. So nobody saw prices coming down. And I'll give you an example. As of last night, I was able to negotiate a deal where the buyer was actually able to get the house for 3% below what the asking price was originally. So that's pretty good news that the buyer, but also, of course, they're not going to pay a little bit higher interest rate, but the interest rate, it's a little bit, the price point is lower, which is what I just said. See, prices go up, that means interest rates are low and vice versa. And let me be clear for people that are thinking about timing the market, because that's not an easy thing. If you want to time the market, you have to take in consideration certain things that I will highlight to you here right now. So one of the things that you need to keep in mind is that the market changes almost every day. Okay. Market is not something that stays like that. It's just markets, they do change every day. And you just got to be mindful of the changes that are happening. So if you want to time the market, this is what you need to take into consideration. Let me just open in my file here so I can tell you exactly what it is that you guys need to think about. Okay. So if you want to try to compete with the market, then you have to have certain things that are not necessarily going to help you in some cases. So if you want to play with the market, you want to go, you think the market is going to change and you want to wait until resets, so fine, you can play that game. If the interest rates remain where they are and you want to buy, good. But if you think the interest rates are going to go lower than they are right now for any reason, think about it, most likely going to go higher. And let me tell you this. So if a house is worth $500,000 and you take a loan for 400, that means you're putting 20% down, you're financing 80%. And the interest rate, it's 6%. Your monthly payment is going to be roughly a little bit under $2,400. But let's say there is a correction. This is where you time in the market. You think the market is going to change and you think there's going to be a correction. Let's say there is a correction of 10%, which it's a huge correction. That means that maybe a third wave of COVID will come and the whole country shuts down, that kind of correction, right? So if that would be the case, so now the same house that used to be 500, now it's worth 450. You do the same thing. You put 20% down. That means you're borrowing 80%. So your loan is about $360,000. But now the interest rate has gone higher to 8%. Now your monthly payment, it's like $2,650. So you see here the tricky part of timing the market. Now your monthly payment went up by about $244, give it or take. That's where I want you to be very, very mindful when we're talking about the real estate market, that this is a beast. This is a big thing that we cannot control. So the last thing here that I want to do is I want to show you what is happening here at our local level. So here is our year to date, and this is always a couple weeks behind the current date here in June, but this is just for you guys to see what is happening with this data. This is for Montgomery County. This is the county where I do business. So you see the dollar volume sold in 2022 versus 2021. It's minus 4.87%, almost 5% less in volume. The average property is selling for a little bit more. And again, this has to do also with inventory, but this is, remember, we are just coming from the hottest time of the year in terms of real estate activity. Median sold price went up about 6.6%. Units sold, you see less units have been sold this year, but prices have gone up because people were rushing to buy before the Fed started increasing interest rates. Average days on the market actually went down a little bit. Average list price to sold, actually it went up a little bit. So this is just to give you an idea of how the market is behaving and how do you need to really take this in consideration. You see the ratio to the average price to sold price, it went up a little bit, like about 1%. And houses in general in 2022 until month of May are selling for about 103% from the asking price. So it's at 3% more than what it is. But believe me, this is going to change in the next few months drastically. And probably houses will be selling for probably between 94 and 98% from the asking price. Mark my words, that's what's going to happen. It's still strong, still good demand, but this is what's going to happen. So summarizing the whole thing, We have a reset coming on the market right now. We're going through a reset. You have to be prepared for this type of reset that we are going to be having in this kind of market. It's going to be fun? Probably not. It's going to be harsh for some people. Probably will be for some people, but it always has to do with your long-term plans, right? So if you're going to be buying a house that you only know you're going to be living there for the next only 5 years, you should plan accordingly. If this is your forever home, that means you shouldn't be taking an adjustable rate mortgage. If this is your forever home, you should be taking a 30-year fix. Now if this is going to be a 5-year, probably property that you're going to be there, maybe you take that into consideration. I say I'll give you some bonus tip at the end. So if you're buying a house, if you're a buyer, you're thinking that, gosh, interest rates have gone up so much, maybe I need to ask the seller to pay for my closing costs and so on. Here's something I want to tell you. Rather than have the seller pay for your closing costs, have the seller pay points to buy down the interest rate. So if you are borrowing $450,000, 1 point is going to cost $4,500, and that buys down the interest rate for about 0.25%. So 0.25%. So keep that in mind, that if you ask a seller to buy you 3 points, that means you're bringing down by 0.75% the interest rate. The beauty of this is that these points are tax deductible. I'm not a CPA. You have to consult your CPA, but there is a potential of you can deduct these points that seller is paying for. So that was the bonus here. So don't ask for closing costs, necessarily ask for points to buy down the points, because that really going to have a better, it's a better fix for you than just asking for 10,000 towards closing costs. And that's the end of it. Buy down the interest rate. So that's it. That's all I have for today. So if you guys have any other comments, suggestions, remember to like and follow, subscribe for more. We're getting to almost 1,500 subscribers here, so I'm very excited now about my channel. Your support means a lot to me. So remember, I'll see you guys next week. Take care. Bye-bye.